And I'm recording. Yes, I am. Historically, what happens to IPOs after the first week or two, the first month or two, the first 6 months? What historically happens? Does anybody know? Why do all the experienced traders don't panic when they miss out on the news and whoa, right? That big rush. You got it, third wave. Most of the time, this is what happens. We get a pullback. And now that everybody knows, hey, we're taking profit, they start dumping. And there's certain individuals who are allowed to dump their shares. If they have more than 5% of the company and they're IPO registered, they're usually locked out for at least 3, 6, 9, 12 months, whatever the underwriters did. And then you got their family and friends that say, yeah, I got rich, I'm out of here, right? Because they're not insiders. They got less than 5%. They put $2,000 in there and they're cashing out. Then there's a group that puts $20,000 in there and they cash out, right? And here we are. Now that we're pushing a month after the IPO, it's cheaper. Question for you. How many people in the wheel strategy are going to start selling naked puts down here and try to catch it at 50 bucks? How many people are thinking, you know what? Got to move an average in here and I'm going to start doing credit spreads while the volatility is still overpriced. Because until you have a 200-day moving average in there, until you have 200 days of data, the Black-Scholes model is way off. It's all based on whatever data they could get. Think about it. How do you price an option on this? Right? It's not enough data. So you got to base it on supply demand and overprice the options. So let this thing form a little bit of a bottom, and then we'll go search for those naked puts. You guys with me? Did you write that down? 3, 6, 9 months, especially the 6 and 9 month drop. Ooh, experience is awesome, is it? So let's jump into this, guys. Here's my picks for today. I got AIG in the financials. Nice swing low. I don't like that it pulled back this morning like this. Look at the Heikin Ashi. Look at the Doji. Look at the Doji. That's okay. Because what I do like is I like this. Boom. Breakout, pull back. Usually it likes to stay above that line. So if it manages to hold the 10, which is a good support, and by the way, it's right here, that would be a nice trigger, okay? So a safe trigger there, safe trigger, because, you know, it tried. And there's a lot of news out there. It's a Monday shakeout. And same with HDB. Nice little riding the 10. Look at it. It's just saying, whatever the news is, I'm bullish. But you look at the candle, it's just open and sold off. So this is a nice trigger above here. Good one-to-one risk reward on target 1. Looking at KBR. Let's go look at KBR. This is my July 13th today's. KBR, same thing. Looks very similar, right? Looks very similar as who? Financials is the AIG, but this is industrials, engineering, construction. I like the Doji there. Looking at this, you can see open and sold off. See that? Seeing a lot of that opening and then selling off. EMN on the bear side, on the other hand, when I see the opening high and selling off, I start saying, let's go look for some bears. Because the open was a gap up and then sell off. Like in the EMN trade here, because just the opposite of that, it opened high and it's selling off. So I might get a trigger here. Target 1 is a little close. But I do like the breakdown at Eastman Chemical Company. Here is my target 1. I might be able to move the break even or take profit here, but the stop loss is here, okay? And then TEL, we're looking at TEL. Is it TEL connectivity technology? I threw this in as my last pick. Why? These are all from the screener. Because it's semiconductors. And if you look at technology, is it bearish yet? Look at Heikin Ashi. Is it bearish? It's not bearish yet. It's neutral. But if you get into certain industries, like the equal weighted, we'll look at the equal weighted, same thing. Look at semiconductors. Looking at semiconductors, I look at a couple at least, different ETFs. And that is real quickly. Here's technology. We saw it, right? Then when I come down to your semis, they're critical. Remember what I said Friday? Keep your eye on semis. Keep your eye. Does that look like it's starting to give you a swing high? It's not a strong enough candle yet. At the end of the day, I'll look at the volume. Then you drop down here, you got some backup ETFs. That one looks like it's triggering more. Look at the regular candle, right? Gap down. And then you got software, which actually looks good. So if it wasn't for software, technology would sell off. Pretty cool? Okay, so back to the day in hand. There is my triggers. That's only a few. We'll find some more bulls. What do you guys like? Anybody like those? So let's go to the markets and let's look at this. Okay, here's the markets. Here's the spiders. And I'm going to move this guy to the side so you can see it. Does it look bullish to you? Okay, brand new. Watch how we break this down. Is it a green candle? Is the MACD crossing up? You would say, yes, it's green. Boom, done. That quick. Now, to fine tune it and put the odds in your favor, you see this red line? It's the 20. If it's above the 20, your buy trigger is going to go above it. But the timing is we're waiting for something like that, a Doji, the spinning top on top of a moving average. The closer to this 20, the better, because it gives you more room to the upside. Now, if it's above the 10, which is a faster moving average, it's actually trending more because the 10's above the 20. That means the 2-week traders are pushing the price higher than the last month traders. So the average over the last 2 weeks, when the 10's above the 20, the average is moving up faster. We're gaining momentum. Now, this isn't a Doji, but you see how it hit the 20? It is a setup. So like if it's hitting the 20, you can put your trigger here and go up. The hard part about that is look how wide that is. The 1-to-1 risk reward would be like here, you know. It works, but we like the Doji because the Doji is a sign of indecision. But that is bullish. Now, after I look at the spiders, which is dominated by these fabulous 5 down here, NVIDIA, Apple, which is already 15% of the market. There's 20% of the market, 24 and 27%. Over 1/4 of the market is in 5 stocks. So out of 500 stocks, right? Oh, we'll get you, Kev. 5 of them equal 27%. Isn't that crazy? 6 of them, the top 6, equal 30%. So what about the other 494 stocks? Yeah, see, it's unbalanced. So if they were all balanced, it would look like this. See the equal weighted? You could click this, or you could click here. See this or this? You could click here, or you could click down here. So if it has an equal weighted counterpart, we have it down here. And look, it jumps right to your watch list here. Doesn't that look more bullish, yes or no? Does that look more bullish, or does that look more bullish? I'm going to say the equal weighted because it's at a new high. It's close to a new high. It's making higher highs. But did you notice the MACD hasn't quite crossed over yet? It's coming out of a pullback. But if you go to the weekly MACD, it's bullish. The weekly. Did you guys go this weekend and put your 9s over? The homework was to put the line on the 20. Did you guys do that? And I'm going to bump this over to the 10 right here. See how on the weekly? Did you have fun doing that this weekend, moving? Because when you're here, look at, you can turn bearish on the daily. You can break the 20 here, right here. And that's a hard area to trade, but you're still bullish. That's the 10 on the weekly. So as we start climbing higher, higher, and higher in the orbit, the air gets thinner. You start getting these bigger pullbacks. And the reason is the bigger the trend, the farther the pullback. The bigger you are, the harder you fall. And the reason for that is like if you measure this, the 61% line is like in here, okay? Well, heck, let's go measure it. Can we do that? Do we have time? Take my fib. When I click that, that's 100. See the 100 on the right? Watch it. That's the very high is the 100% of the trend. Watch this. If I go to the bottom of the trend and I put my 0, see 0? See 100? Where is the 61.8 pullback? Right there on that weekly 20. What do you guys think this line is? There's no number there. There's no number there. What is that line? Well, if you go in here, mine won't save for some reason, but I'm going to click this edit button and show you what to do. I'm going to grab this edit button here. And when I do this, you see how sprocket? You can add whatever numbers you want. Here's your actual fib numbers. Actually, 76.4 is one too. You hit add and done. And look where that comes in. Isn't that interesting? So here it is. See that? See that? We get 78.61. When you go back to the weekly, there's those lines right there. See it? So I have a feeling we're due for a pullback here. But I hope it's not all this week, though. You see how that works? Okay, guys. Who likes Fibonacci's? So I have a special screener called Bull Trends, and you can get this under saved. You see here? These are my saved ones. You can get these. Notice I got stars next to these. And if I have stars next to them, guys, and you want to copy Geno Live and save some time, I would do the same. See anything that says Geno Live, G Live? That's me, the G-Man. Okay? This guy, the G guy. See it? There we go. There we go. So what we have is a filter that says, what's bullish trends? When I click it, check this out. It's looking for the weekly payday cycle. Just got to be green today. Today's day 1, right? So today's Monday. It has to be green. RSI has to have more green days over red days is 50, greater than 50. The weekly MACD is confirmed, and the daily is above 20. And when you do this, look at how many sectors you get. You get biotech, software, transportation. Now, if you want to filter and find the best of the best, because there's 10, you can say, see the weekly MACD? I want the daily MACD too. So I can come to my filter and I can say, you know what? I got 2 MACDs I can put on here. Right now, I've got the weekly. I can say I want the daily above signal. I can say like there. And look at, there's your best of the best. So when you click biotech, it's still bullish, but that looks like it's pulling back today. See that? When I click IGV, transportation, there it is. How awesome does that look? Pushing against new high. There's transportation. Look at that. Up against new highs. Interesting with the oil fiasco going on. Financials. Look at financials. Healthcare. Healthcare is pulling back, but it's still bullish, right? So there you have it, and software. So there's your strength in there. And you can see right here who's actually the strongest is the strongest RSI. So it's financials, then transportation, then healthcare. So that's the order you'd scan for bulls. I am going to scan for bulls, but before I do that, how do you set up your charts like this? Well, this is very easy. Up here, you got a stack of paper, right? These little squares, you see those right there? And to copy the Geno Live, you left click that and you put a star down here next to Payday Cycle Geno Live, not Genie, and sector performance. But if you click it, it'll load it. And it tells you a little about it. It's basically Micah's Payday Cycle, but I've added moving averages and volume. Oh, look at our FCX just triggered. Hit apply. And when you get this chart, it's on here. And then you can go down here and you could copy that layout. And when you copy it and rename it, it pops up in your layouts up here. Basil, as far as return, a naked put or naked call is not as ROI positive as a spread. A spread will have, because you can use less money on a spread, but it will have faster theta because it's a bigger number and it's not being hedged off by the long leg. So you can do a hybrid. I like to do a wide. So for example, let me go into Tesla. Advanced option strategy, guys. If I go down here to the 350, let's go to the 325 and do a naked put. You're going to get more money for the naked put. Okay? Versus the spread, you're going to get less money. But the spread is going to have a better ROI. But since it's less money, because it's hedged by this leg here, this one's going to have a bigger and faster theta. So do you want a smaller ROI, but a faster theta? So what I like to do is a hybrid. A hybrid's called a synthetic naked put. And what that means is, here's that 325, a very wide bull put. Why? Holds up less money than the naked put. And let's say this is like a nickel. It's not lowering your price that much and you're still getting the fast theta. So instead of doing, let's say, a 10-point spread times 5 contracts, I'd rather do a 50-point spread times 1 contract. Same amount of money it's holding up, but you're going to have faster theta. Okay. Thank you, guys. That's enough. I don't want to go into all that. That's a separate class. I'll see you Wednesday on the wheel strategy when we go into that stuff, though.